Welcome to a special Branching Out, Growing Together offshoot episode. These episodes take us beyond our usual format, whether it's a personal reflection, a unique story, or a deep dive with a guest outside our scheduled interviews. And now, here's your host, Melanie Jones.
Hey everyone, my guest today is Joel Hubbard, CPA. I've known Joel for a really long time, and I know that he has deep roots in both the financial world and now the chestnut industry. He has an impressive resume, including the comptroller at Georgia Tech quite a few years ago, and then served the Teachers Retirement Association. It's hard to believe, but almost 40 years ago, he then branched out on his own with his CPA practice, and a few years later started Executive Money Managers. That company was started and still serving clients today to provide more comprehensive financial planning solutions. As you'll find out in the podcast, though, Joel's not just a numbers guy. He's also a passionate chestnut grower and the owner of Georgia Chestnuts. We discuss his journey from financial management to nut farming, what led him to chestnuts specifically, and ideas for all of us to be aware of in creating a strong financial foundation in our chestnut endeavors. You can find more about Joel and his team at executivemoneymanagers.com.
Good morning, Melanie. It's good to be back and it's great to see you.
Thank you.
Thank you for having me.
You bet. Well, this is the time of the year when we're recording this that taxes are being put together by professionals like your team. And, you've told me a number of times that it's a circular business when you're investing in things like property, filing your taxes, getting money back, you're probably going to reinvest in it. So I thought this is just a perfect time to kind of pick your brain for our audience. Just listeners, we will put the link to Joel's previous podcast in the show notes. But Joel, let's just dig in here and tell me a little bit about why you decided to start Georgia Chestnuts.
Certainly, Melanie. Well, it started with a meeting that I had with some friends and clients named Brad and Melanie Jones. We were meeting one December in my office, and we were doing tax planning for the previous year and the upcoming year. And in discussions, I began to ask Brad and Melanie about their chestnut adventures and business. And the more I delved into it, the more interested I became. And then I did personal research on my own. And once I had done that, I guess got bitten by the chestnut bug, if you will. And we literally, on our property, cut down loblolly pine trees in mid-rotation, many acres of them, to plant chestnut seedlings. So
yeah,
that's my background and how I got into this.
Yes, and I'm very grateful to have been a client of yours for a long time, and I know that you do significant amount of research and planning and everything. So just appreciate you today sharing even some more insights. So let's say that someone's thinking about investing in land to have a chestnut operation. What are some of the things that they should think about and options that they have?
Well, the first thing that I would consider is what kind of entity do you want to put this into? There's several kinds. There's a sole proprietorship, there's a sub S and an LLC. This is the form that the way that you would own the land. If you already own the land, that's one thing. But if you're considering to buy the land, that's another way. So the entity that you put it into, a sole proprietorship, is the most simple way that you can do this. It requires no legal expenses, no permission, anything to set it up. It's filed on a Schedule F of your personal tax return on Form 10, well, your personal tax return, which is Form 1040, and because it's agricultural, it goes on a Schedule F. As I said earlier, this is the simplest, cheapest way to put your land into a business. But there are also some cons or negatives to this. One is that it's subject to self-employment tax, FICA tax, which is if you get a W-2 at your normal job, they take 7.65% out of your paycheck, and your employer pays a matching share of 7.65. The total is 15.3%. If you're a Schedule F sole proprietorship, if you will, a farm business, then you're going to pay 15.3% of the profits. That's after you got your gross income, your expenses. So the net profits, you pay 15.3% FICA tax in addition to your federal tax and whatever state you're in. The final thing is there's no liability protection from the owner if on your chestnut business, if you get into legal problems, there's no liability protection. That liability flows directly through to you, the individual.
Yeah,
So that's
sole dangerous.
Proprietorship. Yes,
absolutely.
The next kind of entity is a subchapter S business, and it's a sub S or subchapter S. To qualify to be a sub S, you have to be a domestic corporation. You have to have allowable shareholders. Those can be individuals, certain trusts and estates. But however, partnerships and corporations cannot be owners of a sub S, or you would go over. There's a limit in a sub S. You can only have 100 shareholders, and you can only have one class of stock. And I don't want to get too nerdy or wonky, but there's common stock and then there's different classes of preferred stock. You can only have one class of stock. And there's certain entities that are ineligible. We won't go for this discussion into those. You must incorporate with the Secretary of State wherever you're domiciled or located in your resident state. Then you have to file with the IRS and get an employer identification number. We slang it and call it an EIN, and that's done on a form SS4. And then you have to file a small business. You're a C corporation at that point, like Home Depot or IBM. Then you elect small business status on Form 2553. And now you're a sub S entity or a flow-through business. A flow-through is taxed at the individual level. This entity, the sub S, has income and revenue and expenses, but it flows through on a K-1 to your individual tax return. Then the final entity is an LLC or limited liability corporation. And to do this, it separates the owners from the business debts or taxes of the business. You have to have 2 or more members. If you don't, the IRS will collapse this and put it on the Schedule E. The typical business is a husband and wife, where if you want to make it a minority-owned business, it would be 51% the wife, 49% the husband. Then it's a minority-owned business. To do an LLC, you have to reserve your name with the Secretary of State again. You got to get an EIN with the federal government, employer identification number, but you're not subject to FICA. And that's why I recommend either a sub S or an LLC, because it's infinitely cheaper tax-wise to do a sub S or an LLC.
Well, now I know why I call you. That's a lot of information. It's a lot of information, and it's a really good thing for growers or any business entity to consider what is the right choice. And I think that our listeners have the ability to reach out to you for a consultation if they're interested in learning more about what's the right structure for them, I think.
Certainly. And it really depends on the facts and the circumstances of the individual person or group of couple, if you will.
Yeah, for sure. So if someone's thinking about buying land or has land, maybe they're doing some expansion. First is decide what kind of a structure that you just went through. Second might be looking for financing options. And I know that this is one of your favorite topics, is getting creative and looking at all the angles. So tell us just a little bit about, where would you start if you were new at looking for
Sure,
financing?
certainly. The various places to find money to do this, you can take it if you're blessed. You can take take cash out of savings or liquidate after tax investments. You do not brokerage accounts where you have stocks and bonds and things like that. You never ever want to take it out of an IRA or a 401k. You can get loans and you pay the loans back to yourself, but the first place you should look is cash and money market funds or CDs or treasury bills or brokerage accounts. If if that's not sufficient for what you want to do, your investment, then you can consider financing this. There's several sources that you can get financing from. You can go to a commercial bank, and there are the big banks, the
Mhm.
Banks of America, the Truist, and people like that. And if you're big enough, they have certain departments at a large bank. I know a young man that worked in the ag end of Bank of America, and they have a whole specialty group that does this. But you're talking thousands of acres, a huge investment, probably not for our audience. You can
Right.
go to local community banks, a hometown bank where you live, and they can lend money. However, the negatives to that is, and I have been a community banker and served on a board of a community bank, it's really not in their style box. They want 40, 50, 60% down. If you, let's say you purchased $100,000 tract of land, they might want 45, 50, $60,000 down, which is just, to me, not acceptable.
Yeah.
The other place that you can look is mutual co-ops or mutual groups. These are people like Ag South or Ag America. I have used these people in financing land that I've done. This is in their sweet spot, their style box. They might want 10, 15, 20% down. The interest rates will be much better. In thinking about this podcast, I called a community banker friend of mine, and he said the going rate today is 7.5, maybe 8%. Ag South and people like that would be 5.75 or maybe 6%. Also, it's a mutual, so you get participation or dividends back annually some years in the future. So it really lowers your interest rates. You want to
Yeah.
consider the down payment and the interest rates on this as
Yeah.
you consider where you go.
Yeah. What can you afford? And I know we learned that kind of the hard way. One of our first tracks, we went to a small bank here in Kentucky where we were just had some land. Then we lived in Atlanta, and it was over 8%. And then probably after talking to you, we went to e-farm credit and lowered it considerably until we were able to pay those off. But it makes a big difference in the payment long term, especially. So that's great advice on that. Um, okay, so now we have another favorite topic of yours probably is tax structures. This is the time of the year that people are thinking about this. So can you walk us through, kind of the real estate tax considerations for land specifically?
Sure. Um, the tax structure, the taxes, you're talking about the taxes.
Mm-hmm.
Okay. There's real estate taxes. Let me back up, Melanie, and add this over to the other thing, if I may.
Yeah, sure.
The question, you want to consider the traditional things on the loan, such as the down payment, the interest rate. And is the interest rate fixed or variable? The term of the loan and the covenants that the bank or the mutual people put on that land. Sometimes they can put covenants that are just not acceptable. Also, there are other programs such as USDA programs and things like that. My experience has been there have been strings attached with those, in that is an approval process that takes time. And if you spend your money, personal experience, I've gotten federal money or ag money, cost sharing for erosion control and things, invasive species like privet or kudzu. You have to get the approval. If the money's there, these programs often run out of money, and then you can't spend the money until you get their approval. If you do, they will not honor those expenses and you lose them. So
Wow.
you
I
want to
wasn't aware of that. Yeah.
you want to do that. And personally, I don't like strings attached to things, and I'm not a very patient person waiting months, 6, 7, 8 months. If I need to spend the money for erosion control or to eradicate invasive species, I don't want to wait 6 months to maybe get told no. So that's
Yeah.
just my personal thing.
Mm-hmm. Yeah. You want to
And
solve
Melanie,
the
I'm
problem. You want to
sorry about,
solve the problem, right?
yes, I'm sorry about the disjointedness of that answer.
Oh, no, no, that's okay. These are topics that a lot of people just don't know about. So this is it's phenomenal. So yeah, what I was talking about is that landowners have to navigate tax structures. So what are the key real estate tax considerations that I guess there's probably pros and cons?
Certainly. You need to consider, and this is specific to each individual, such as what is your marginal tax rate, meaning that last dollar you earn New Year's Eve on your tax return or your W 2, what rate is that taxed in? We live in an environment that is a progressive tax structure, meaning that your lower dollars are taxed at a lower level than those higher amounts. So it's a progressive tax thing. So you want to consider that. What is your marginal tax rate? What are your long-term goals for this land? The
Yeah.
objectives. Is this land that you would consider flipping if you're in the path of industrial growth for HBU, higher and better use? Um, is there, are you in the, would a highway come through your land? Would a subdivision developer want to come acquire your land? If your land is off the beaten path, then you want to consider how long will you own the land? Will this be legacy land that you pass through to your children, your grandchildren, things like that? Because as we all know, chestnut orchards and the chestnut business is a long-term capital investment. I would
Mm-hmm.
say to our listeners, get advice from a professional that knows your facts and circumstances. Let them get to know you enough, your personal thing, your personal income, your tax situation, your tax bracket, your long term goals and objectives, so that you make the right decision.
Yeah. Yeah. What percentage of
Also, the
your
last thing is get a professional that has been there and done that. Tax preparers and people, investment people, are wonderful people, but if they've never done any ag investing or don't have any clients that have done that, you want to look for a person that can tell you the ins and outs, the pros and the cons, the things you ought to think about in this decision process.
Yeah, I was thinking like, that really is one little specialty that your team has. And you think of a financial consultant advisor, tax strategies and stuff, but maybe the everyday person doesn't think about how much time you guys spend crafting the strategy for your clients to execute. And it's really important to maximize the benefits of what we're all trying to accomplish, I think.
Absolutely.
Um, okay. Another question is, takes a bit of equipment to be in farming. And so what can you tell us about just the sales taxes that apply to stuff that you're buying and writing things off and that whole bucket?
Sure. Equipment is a capital expense that you can write off either under straight line depreciation or accelerated depreciation. We slang it, it's IRS code section 179. We slang it and call it uh, code section 79 or accelerated deduction. So you want to look at that because you can recover that. That's an expense that you can either take in the year that you buy it or over a period of years. I've had clients or friends that bought things, quote, in December, put them into service. That's a very important thing. And if they had the income, you could write that off that current tax year and you accelerate or bring that depreciation into the current tax year. Remember, this money can go and shelter your W-2 income from your day job or jobs if you're married, filing jointly.
Yes.
Sales tax. This is, you can get in Georgia an ag exemption, and it's called a gate card. Georgia Agricultural Tax Exemption is the acronym for that. And if you go and buy a tractor or a disc harrow, or
chestnut
bush
trees.
hog, yeah, well, yes. If you buy tree tubes, chestnut trees, chemicals, or supplies, if you have this gate card, you're exempt from sales tax. And to be a little nerdy and wonky, in Georgia, it's $50 a year. Our normal sales tax rate is 6%. So if you divide 6% by $50 and interpolate it, it takes $833.33 to get your money back. In a 7%, it's $714.29. It's a very wonderful investment. They give you a little gate card here in Georgia, and I'm sure the other states have it. Mm-hmm. You can register that. I have mine registered at the local Ace Hardware, at Home Depot, at Tractor Supply, and Harbor Freight, so that when I go in, I give them my PIN or my cell phone number and my purchases. Now, you can't use it to buy picnic supplies.
Yeah, exactly.
Yeah, yeah. You must do it that way because there are people that audit these things, and you don't want to be that person that does it incorrectly. But it's a wonderful benefit for people in the agricultural business to save on their taxes.
Yeah. Right before we joined on the podcast, I had a question on our own taxes. We're putting in new orchards, and how are we compensating or positioning that in our tax return? So I always appreciate real time advice of like, well, this is what we're doing and why we're doing it. Okay, and yeah, we have a tax exemption card here for farming too, and it's amazing how that adds up. Just the tax that you're saving on everything. Okay, so it's important for anyone that's selling a product to know what the sales tax laws are on their sales. And what do you know about that?
Sure. The sales taxes are specific to each individual state. I can speak here in Georgia. The end user, the end seller collects it from the end consumer, the end user. So if you sell chestnuts to someone from your orchard, you should collect the sales taxes and you would remit those to your state. In Georgia, there are local options, and it's for specific things. In the greater metropolitan area, we have a transit system called MARTA. We collect sales tax from MARTA. then you can have other local option taxes to build roads or schools or bridges. It varies by your local county option. It can be anywhere from 4 to 7 or 8%, but you collect that, and then the end seller collects it from the end user, and they have to be remitted to the state. And in Georgia, they're remitted by the 20th of the next month, and you have to fill out a sales tax report, and you have to remit the taxes. If you file and remit the money timely, there's a 3% vendor compensation that you, the vendor, the end collector, gets for your trouble. So you
Wow.
want to know your local state taxes, talk with your local tax professional, somebody that has experience in this, and get them to help and show you, or they can prepare the sales tax report, or they can teach you to prepare the sales tax report and remit it.
Yeah, and it is very different from state to state. In Kentucky, we just file it once a year, so that's interesting.
Okay.
But yeah,
Here,
just knowing specifically what your situation is just part of being a business owner. Um,
yes, but again, I can't stress the importance of use someone that knows this in your state, your locale, as you ramp up. The best thing is if you have a person that has a gate card and comes and buys trees or nuts that you're going to scarify and put to sleep. And then if they show you your ag exemption card, and you should record it and keep that in case you're ever
mhm.
audited. But then you
Yep.
don't have to collect the sales tax.
Okay. And also, if someone is buying something from you and they live out of state, I think that in a lot of states, then there's no tax due.
Yes, that is true. But as the various governments and states become more hungry for revenues,
Yeah.
uh, years ago, I used to buy things from Lands End and L.O. Beam down here in Georgia, and they were exempt from state tax, sales tax. Now they're
Wow.
collecting, and
Yeah.
and it's an evolving process. But know the laws and keep up to date with what's going on, because it's my belief the states need more and more revenues. They're going to look for ways to claw money from we, the taxpayers. That's a
Yeah.
biased statement, but I think that's the trend.
Yeah, that makes sense. In the beginning, I said something about the circularity of making money, spending money, reinvesting. Um, that's kind of an important thing for people, isn't it? To say I've got this profit. Well, I could go blow it, or I could look at how can I invest it, especially in this discussion of chestnut trees, so that you're continually leveraging the funding to get more tax write-offs the next year. Do you spend a good bit of time talking to people about that?
Yes, and this is the common sense part of this. Only spend the money if you need to or it makes you money. I have clients that come to me that have said, well, my CPA told me to go buy a new truck. Well, if your truck you have is functional and wonderful, why would you go spend the money? Because you're only getting cents on the dollar for a tax deduction. It
Yeah.
has to make economic sense in your business. If it'll make you more efficient, more productive in your business, yes, spend the money. You can spend the money at the end of the tax year. I have 10-foot T posts stacked up waiting to put up an orchard fence. I spent the money this year and pulled those expenses out of the future year, excuse me, the future year. But it only makes sense if you've got to spend the money to do something. It's efficient, makes you more productive or profitable.
Yeah, that I love that answer, Joel, because you kind of hear that sometimes, like, well, you got this, and it has to make sense. But luckily, in the chestnut business, it usually does make sense. There's always something that needs to be pushed forward. Um, Okay, so let's talk about good record keeping and tax filing strategies. I think that there's probably some common mistakes that people make that own a farm, or even maybe mistakes are one thing, but just lack of knowledge is another. So What can you share about that?
Sure. The most common mistake is omitting deductible expenses. This can come about either through ignorance of the eligible or deductible expenses, poor record keeping, or sadly, my brothers and sisters in this business that don't have the knowledge to understand what are the deductible expenses.
Yeah.
Uh, that you get bad advice from a tax professional that is not familiar with the business, um, or that hasn't stayed up to date with the tax code or the tax law changes. Tax laws and tax codes are like the weather, they are constantly changing, and the tax professional needs to stay abreast of the things going on in the specific industry that they're advising their clients on. But
Yeah.
omitted expenses are the
Y-
most common mistake, and they're very costly because you're losing federal and state money on that.
Yes. So you have quite a history and success in the pine tree plantation business. Are there carryovers that you see from that business to the chestnut business that you're, deep in now?
Yes, you should keep up with your expenses, as I said, manage them, and if you get to the end of the year and it makes sense to spend money, spend it. You can, if, for instance, chemicals that you're going to need to use, Roundup or glyphosate or oust or other chemicals, they're not going to go bad. You can purchase them and pull them forward into the current tax year, as I talked about, like T-post or things like that. You can have losses if you overspend the $10,000 limit in building an orchard or a pine stand, a chestnut orchard or a pine stand. That money carries forward into future years when you have the profits to consume those.
Yes, that's huge, and I know we've talked about that too. And just understanding this, I think that what I'm getting from this conversation is that having professional guidance is really important. But what's also important is that the person guiding you has a knowledge of this industry. This isn't a retail store. It's farming, agriculture. And so I know that your expertise, and I'm not saying that just because of you, but it makes a difference because you are in this business too. So why wouldn't you seek counsel?
Yes, and the world of taxes and accounting is a varied thing. If you came to me as a CPA and you asked me about a manufacturing process, whether it's uh, unit cost accounting or process cost accounting, I would say you need to seek a specialist. Yes, I knew enough to pass it on the CPA exam, but that has gotten old and cold. You need
Yeah.
to find whatever you're in specifically and seek out someone that knows that specifically so that you can get current great tax advice. And
Okay.
that's true in legal counsel. I have a dear friend that is an attorney. He's a real estate attorney, and this individual says he'll be at a party and somebody asks him about an estate plan or divorce. And this person, I'm careful not to call his name, says, "You need to talk to an attorney." And they say, "But you are one." And he goes, "I don't know about that. I don't." He's a very specific real estate attorney. He wouldn't
Yeah.
know about trust or estates or
Or divorce.
things like
you know,
that. Yeah,
yeah,
divorce. Thank
yeah,
goodness. Yes.
yeah, exactly. Well, that's a whole nother topic. I know that you're really interested in legacy and um, do you counsel people on creating a trust, or what's the legacy of this chestnut orchard that they're developing? Like, you need to think about the stuff on the front end more so than the back end, probably.
Yes. The farm that I live on and that I'm changing was a dairy farm. It's been in the family almost 100 years.
Wow.
And it sadly it's in the path of progress, the growth of Atlanta. But my wife and my children and ultimately my grandchildren would never want to sell this land. So you have to know what is the intent of the land. If it is going to be that, you can put it into a trust and it can go intergenerational. And this is probably beyond the scope of what we're talking about, but you can put the land in an LLC, which is owned by a family trust, and it can go in Georgia, I believe it's 360 years. And it varies by state, but there's all kind of tax implications there as well. Now, you don't get a step up in basis if it's held in a family trust like you do if you own a farm, and let's say you paid $500 an acre for the land, and ultimately when the person dies, we'll say that the husband dies first, you get a step up. If it's joint owned, you get a step up in cost or basis to the date of death of Joel's half. And then when his wife dies, you would get a step up for the other half to current market value.
Okay.
That's
That's the quick
way
version.
beyond this. Yeah.
Yeah. Is that something that your team could help our listeners with if they're interested? Because I think it's a hot topic.
Absolutely.
Okay.
Absolutely. We would need to know the facts and the circumstances of the individual person, their goals, their objectives. What is the future generational goal here? Do you want your children and your grandchildren to be invested in do this? Personally, I ride my grandchildren around in my RTV and talk to them about future generations. That they will someday be out here picking up chestnuts when I'm long gone. So
Yeah.
you won't buy in from future generations, but the facts and the circumstances of the individual family case will be the most important thing.
Yes. And I know it's important because I talk to people literally almost every day that are looking to get into the chestnut business. And that's one of the drivers for so many people is this is for my kids or for my grandkids. And it's something to work on with my kids and my grandkids. And so anyway, I just think maybe we'll do another episode just talking about this one subject.
Sure. Let me give an example here, Melanie. Let's say that the family has a special needs child.
Okay.
You could start a chestnut orchard or grove with the idea that after the mother and father are gone, this money would be there from the chestnuts to take care of this person across their life and beyond.
Yeah. Wow.
So there's many applications here that you could use this for. It's just the facts and the circumstances of the specific case.
Yeah, that's right. Awesome. Okay. And I guess I had a couple of questions. One is here, are there any lesser known tax credits or deductions that farmers, specifically chestnut farmers, could be looking at or take advantage of?
Sure. In Georgia, there's a movie tax credit because our government people had the foresight to bring the movie industry here to
Yep.
Georgia. And every dollar that the movie people spend, they get a dollar for dollar tax credit to entice them to come here. Then they sell those. You can buy movie tax credits in Georgia for cents on the dollar, and it will cut your state taxes. There's here in Georgia, it's called a Georgia Gold Scholarship Program, and you can, for a couple married filing jointly or a single person, it's $2,500. Married filing jointly up to $5,000. That you literally pay into the Georgia Gold Program, and it's a dollar for dollar tax credit against your state taxes, and you get to pick the school, the private school that this money goes to. So if there's a certain church school that you like or favor, or in North Georgia, there's a Nacoochee school. There's also, this is being expanded in my research. It's been being expanded here in Georgia for firefighters and things like that, rescue people, that this can go to various rescue or fire groups to buy equipment and things. It's a dollar for dollar tax credit. You don't make anything, but it doesn't cost you anything. But as he says, the rest of the story, if you do this through a LLC and you, instead of paying at the individual level, you pay at the corporate of the LLC level, then you not only get a dollar for dollar tax credit, but you make money because it's a federal tax deduction and you can take it as a federal. So you literally can make money on this.
Yeah.
And you
So
get the help of school or a charity or something.
I'm pretty sure that most of our listeners don't know this. Like, that's fantastic, and it's why you turn to professionals in a lot of different situations, not just
Sure.
tax and finance, but it's
And
important because, yep,
this
sorry,
is a growing thing and it's expanding here in Georgia from private schools to, as I said, the firefighters and rescue people. This is a very new phenomenon, but as things get more expensive and the needs of groups become greater, I think you'll see this expand over time. So check in your individual state, check with somebody that knows this, and
yeah,
you can not only save yourself money, but you can direct it to something that touches your heart.
yeah. It sounds like a win-win, because tax write-offs are important, but also giving back and helping is important in our world. So that's okay. Thank you for that. Um, So here's a question. This will kind of, I know you got other things to do today, but if if you were going to give someone just like your heartfelt financial advice about investing in a chestnut operation, what would you tell them?
I would tell them to remember that this is a long term investment. And it's not like if you go and buy a business that if you're cutting hair, you buy some equipment to cut people's hair, color, tint their hair, do whatever you do. This is a long term investment. It's capital intensive.
Yeah.
And it's long term, meaning that if you plant a chestnut orchard, you won't get chestnuts, excuse me, for 5, 6 years, and you'll begin to get them, and it's very slow. It takes time and patience. It's capital intensive, but you will eventually, if you're patient and you have a long term horizon, you will get your investment back in spades. And as I said earlier, after I came to know and understand the chestnut business a little bit, not that I know it all by a country mile, as you come to know this, it makes sense. And we cut down loblolly pine trees to plant chestnuts, but it's a long term goal and horizon.
Yeah.
It will take time to get to break even where your profits, your cumulative profits, equal or exceed your capital expenses, your investment in the business. I would say to the person, start small. If you're blessed to own a farm, plant 4, 5, 10 acres of chestnuts. Over time, as cash flows come available, then grow and expand your orchard as your cash flow permits. That's true in my case. I'm not blessed enough to go and plant 100 acres of chestnuts. I started with what I could, planted a few chestnut trees, and then as trees became available and money, I grew my investment. So
Well,
understand
yeah,
it's capital intensive and it's a long term investment.
right. But I think you have more than a couple acres planted in chestnuts, don't you?
We do. Yesterday I finished planting for this year, and right before the rain came in, we and the people helping me, and we put in 2 more acres. This year we put in about 12 acres of chestnuts, 12 or 13 acres more to what we have. So,
Yeah,
and
that's
I'm
exciting.
looking forward to next year about trees and scarifying nuts and putting in more acres. But it's a time sensitive thing and money sensitive as well.
Yeah, that's right. Well, I was reading a really good report on the chestnut industry in general. And, it's talking about the chestnut has the potential to replace corn and have a crop that is so much better for the earth. So when you think of it that way, just like everyone that has chestnut orchards, which there's significant number already, but many people putting them in now, that might be the answer to part of some of our environmental issues and helping our soil and changing the food products that we eat to something that's as nutritious as the chestnut. So there's a good financial upside for sure if you're patient, but who knows where the industry will go in the next 10, 20 years. So exciting.
Absolutely. Absolutely. And the arable land that we've been blessed to be given is a finite amount. And as we said earlier, this is a long-term investment. So if you start today and prepare, it can pay dividends to both your family and the end users of your chestnuts across the decades.
Yes, and let me end with this, that Joel, you have worked very hard. You've had some significant positions and roles in finance and business and leadership, but now that you are investing more and more time into your chestnut operation and orchard, you just have a spring in your step and a little grin on your face. And so there's that aspect of joy too, isn't there?
Absolutely, Melanie. I look forward to being out in God's great outdoors and doing something. And I'm never so happy as when I come in exhausted at the end of a day and I've accomplished, whether it's planting a tree, pruning a tree, uh, cleaning a fence line or something, whatever it is, burning slash from the pine trees or whatever, you've accomplished something towards your goals and objectives. And it's just a wonderful feeling.
Yeah, absolutely. Well, Joel, thank you so much for taking time today. I know it's a busy time of the year for y'all and your team, and appreciate this. And we'll look forward to having more segments with you talking about some of these other topics that people are interested in.
Thank you, Melanie. I appreciate the opportunity. Thanks again.
Absolutely. You're welcome.
Thanks for joining us for this offshoot episode of Branching Out, Growing Together. If you enjoyed this, be sure to check out our regular episodes where we continue to explore growth, connection, and the chestnut industry. And don't forget to like, follow, and subscribe for more. Until next time, keep growing.